Welcome to Straddle Income. We're here to help you make money through stock market and other investment vehicles. Today is Thursday, August 6th. It's another huge day because Nasdaq has been on the 7th day with over 11,000 points. So let's look at the overall market. Again, S&P and Nasdaq has reached a historical high. The market is very bullish. We're towards the end of the earnings season, but there's several companies that are still reporting huge earnings today, and there's one particular company actually reported a huge loss, which I'll go through that next towards the end of the video. But before that, let's look at some of the trades that I made today. So right from the back, today's Thursday, it's very close to the Friday, which a lot of options are going to expire on Friday. And let's first look at some of the trades that I take a profit, and I'm going to focus on one particular trade where you can think about how you can, leverage the option to make big profits through breaking news. So first of all, I was taking a couple profit on my earlier trade from last week. For example, Disney. I have a long-term, I have a long-term Disney call, but Disney was reporting earnings last week. So I have some short-term. For some of you guys have not watched the video when they reported earnings, I was buying some of the puts before the earnings report, and actually got a collapse because Disney reported a nice earnings this Tuesday. So excuse me, I thought it was last week, but it's actually Tuesday. And then right from the back, the next day, in the morning, I came back and bought a couple calls, that are expiring next week, August 14th. So you see the trade that I made before. I had purchased about 3 calls at the price of $30. And now, along the way, I've been taking profits. Initially, my philosophy is always trying to take the initial investment back. So I paid about 3 quantities of the call contract. I paid about $90. And right when the Disney call price increased to around $90 to $100, I closed one of the call to get my initial investment back. Then earlier today, I actually closed another one. So I have one more left that's still outstanding. So that's the trade I did today. I closed my second call and I profit about $152. So you can see right from earlier last week to now, I've made a profit about $120 by just quickly flipping a Disney call. The other trade I did earlier, I take profit on was the Innova. Innova, actually, my contract is again in the money. So I've purchased those contracts several weeks back. So I think in the July 23rd, I purchased about 2 of the Innova call at the strike price of $25. At the time, I was paying for $61. This morning, Innova actually, this particular call contract is in the money. When a call contract is in the money, you have the bragging rights, meaning if you are the call purchaser, you are the buyer of the contract, you have the right to actually, exercise. So that's where a lot of the intrinsic value of the call contract comes from. And today the price, because it's traded at $25.29, the call contract of this particular one that I purchased last time, now it's in the money, and the price of the call contract has increased from $61 to now it's about $81 $85 if I were to sell it. And if I were to purchase it now, it would be $115. So there's quite a big gap here. And one of the tricks that I talked about in my last video is how you can, figure out what's the optimal pricing between the gaps, and that's the last bid price that's in this column. So for some of you guys that are not familiar with it, I really encourage you guys to watch the video that I will post in the link down below. So right off the bat, so I took another profit on the Innovate call, and then there were a couple other things I was taking profit on. I took profit on the Microsoft call. Microsoft was, again, had a run up because the fact that it was in the phase to acquire TikTok. So it seems it's a rumor, but there's a lot of anticipation on there. And last but not least, I also closed one of the spreads that I did a couple of weeks ago. So Etsy was reporting earnings this week. So earlier last week, I sold a put spread for Etsy. Basically, the put spread at Etsy is pricing at $110 and with the protection of $100. So as long as Etsy stay above $110 by tomorrow, I'll be able to get all my profit. But this is the things about option contract. When you feel like you have enough profit and there's you just probably want to close it before the expiration. So that's a clean way of doing things rather than let the system take care of it and you just never know. So that's what I did. Etsy actually has been doing pretty well the last couple of days. Let's look at their chart. Etsy has been doing pretty well the last couple of days. It has been running up for a while. Now it's $138. Today actually dipped a little bit to 133. So my put spread is basically trending around 111. 110, that's where a lot of the resistance, the consolidation was. So that's why I picked this particular level. So if you look at the grand scheme of the things for Etsy, 100, it's been really trying to, the last couple of weeks has been stepping up here and there. And I think the $110 is a very good point for protection, and $110 is where actually start to reverse from that point on, and that's where there's some kind of a shakeout around this area. That's why I picked 110 as the consolidation and $100 as the protection. So that's the trade I did. I closed the spread for the Etsy and took some profit back. I think I sold it back at $6. So the overall premium I was able to collect is about $170 from this particular spread in a very short time frame. And then there were a couple of stocks that are not performing well, so I ended up closing them with a small, very tiny loss. Cloud is one of the ETFs for cloud computing in the sectors, and the CRWD is not doing well either, so I closed that as well. So with that being said, let's go on and focus on one particular thing about how you can actually profit with the breaking news. And this is about the Facebook. Let's look at the Facebook stock chart today. Facebook actually had a great, gapping up towards the middle of the day. There was a rumor that Facebook is going to launch a new product, and at the time, the new product is going to be very similar to the TikTok. And then later on, it was confirmed. So that's why where you see, particularly, there's a huge gap up around this area. So let's look at the 30 minutes. I think really around about 11 o'clock in the morning, that's when the news first hit. And then it just kept going up and up. This is very typical for Facebook. Last time when Mark Zuckerberg mentioned that they were going to compete with Zoom, we saw a similar trend. And here is the trick about option. Option contract is expiring on Friday. And then when news like this with a new product launch, there is a huge run-up. You can actually score some very cheap contract and enjoy the profit. So let's look at the option chain for Facebook. So Facebook, I was debating, should I purchase a weekly call that are expiring tomorrow for Facebook, and then, or should I go one more week out? So I was comparing the two price both for week ending for August 14 and the week of ending August 7. And when the news first hit, the option chain was really in a very chaotic state. It does not know how to price it. So right from the back, traditionally you wanted to be able to have a budget in your mind, how much you want to spend. And for myself, I don't want to risk too much when the news is not confirmed. So my budget is about $50. And I was looking at about both of the option chain expiring tomorrow as well as the option chain expiring next Friday. And then it's the same price for $51 at strike price of $290. Actually, it's about the same price for the two weekly contract. So that's when you actually can, leverage and sneak the option chain. With the same price, you can get additional 1 week of option premium. So that's why instead of picking the option contract expiring tomorrow, I ended up picking the option contract expiring next Friday, pay the same price as if, for the contract that expiring tomorrow. So I paid about $51, and then now, you can see it's actually increased from 51 to 62 and 78. I was doing that already pretty late. I think it's the time, the trade time is around 9:35 Pacific time, but the news really started hit about an hour or so earlier. Because I was working and something got distracted. So I was pretty late in the States, but that's how you actually profit from using option to profit from the breaking news. You can use option, especially looking at the weekly contract, and that's when a lot of things are very cheap. You can actually buy them at a cheaper price and enjoy the run. So that's all the trades I want to talk about today. And tomorrow, there's a couple of things I want to focus on. Disney, I want to profit, take the last remaining profit. Square, I want to see if there's anything for me particularly. Square, I'll have a Square call contract expiring tomorrow, but I bought it I didn't get it in the very good time. My contract is way out of money, so you can see it's pretty much collapsed around there. So I think I already took my initial investment back. So this is a free trade for me, and then you can see initially when I paid it up this particular free trade at $41. Now it's just $1. So that's Square, and then Microsoft and Fastly and Snap. Those are 3 stocks that I want to pay close attention to, especially because the fact that the U.S. president has signed an executive order to ban the TikTok, which is a social platform very popular social platform in the U.S. So Microsoft is the buyer of that. I want to be looking at it closely to see if there's an opportunity to buy some cheap contracts, weekly expiring contracts tomorrow. And Fastly, I would be looking at buying the weekly put expiring tomorrow. These 2 trades, I'll probably have to do it very early in the morning, and then do a day trade towards the end of the day, and then do a quick flip. And then another thing I wanted to talk to you guys is about Uber. Uber reported earnings today. As expected, there's a huge loss. But if we look at their stock chart for the extended hour, it's actually not doing too bad. There's a huge drop when they first reported earnings. Then it kind of just consolidated back and trending up a little bit. So I don't have too much Uber contract. My Uber contract is a lead contract expiring next March. So I have plenty of time on that, but in the meantime, I have Uber shares. So that's one of the things I will be looking at. And again, the Facebook contract, I'll pay close attention to that to see if it's worthwhile to hold it, and maybe if if it's reaching a certain level, I'll just probably close it. So here, everything for today, August 6th, and then the things that we're looking at tomorrow, August 7th. With that being said, tomorrow is the day where a lot of the option contracts are expiring. It's weekly option contract, and again, when it expires, that's when you actually can make some good profit. If there's any breaking news, the contract, the put contract, the call contract are going to be cheap. That's when you can buy it cheap and really do a quick flip for day trade. So be careful on that. None of this is actually recommendation. It's for just educational purpose. For trading options, it's very risky. You can lose a lot of money. So be mindful, be flexible. And with that being said, I'll see you tomorrow. That's everything.